Good morning, SMF, MMTs. Nice morning, 4/13/2011, 5:46 a.m. Pacific Standard Time. We've had some retail sales that came out. They weren't gangbusters, but they weren't all so bad. And you had the JP Morgan earnings come out. And what I would like to point out, MMT, is like yesterday, you didn't see this. It was quite the opposite. And price action volatility during the earnings season works a certain kind of way. For the retail investor and the retail trader, they've got their little goofy ideas, as always. But when it comes down to making a market, because we're market makers, when it comes down to making a market, well, they seem to not be able to do so well. So we have a very long ascending gap up list in the NYSE to the 1.01 ratio. Look at the depth of that list. Then we start to get down below there, and it goes on and on and on and on. So yesterday's headlines around the world and all of this coming out and everything about Japan, what started yesterday's sell-off from the previous day on Tuesday night or Monday night, there was a bunch of radiation, this and that, and all over again. Somewhere along the line, that's going to get out of the market. This market and this economy is going to pay attention to the fundamentals. Another thing, MMTs, you're going to have Obama coming out today as well, 1:30 Eastern Time, about his budget plan and other things. So the kind of stocks that were oversold, Goldman is gapping up along with that JP Morgan. That's why it's on there. That CEO that got slammed yesterday very nicely has got that gap up. That means the bears are going to have to cover. Yesterday, the bears didn't have a reason to cover because there was no big gap up list to bring them out. The other part that we're looking at is where that fear is. Now, on the other side of the coin, when we take a look at the gap up and down list, you got MSB, AutoZone. It's very diminished. Look at it. Very, very diminished. Very, very diminished. Versus very, very expanding. What does that mean? That means that people want in, that it's earnings season and shorts are going to be covered. That MCP right here is a good trader off of yesterday's pullback. You got to be trading that one there, Mr. Sean. 1.38 ratio gap. And, you know, we put people on this. We added it to the market maker SMF list. A CEO is a good one. That Cleveland Cliffs, some of these stocks that were just getting smashed yesterday in here, these are very smooth ones. But I will tell you that MCP is on our market maker list. And that one provides a very nice daily income as a market maker. CMG up again. Caterpillar after being sold down a couple of weeks ago. Okay, you got Riggs Transocean in here. So you got BTU Energy in here. You got Hess. These are some of the various different names in those sectors. And the program trading on the NYSE is that 60% of your trades are electronic. They're programmed and by institutions on the NYSE. And they're very smooth to learn how to trade a listed stock versus a NASDAQ stock because there's only a floor specialist assigned to it, where NASDAQ has got several cutthroat market makers buying and selling and doing all kinds of things. But it's going to be a nice day. We're going to be looking for that pullback. Then when they pull back is where, bam, you get that 3-minute buy action bar. And just how robust this list will be as we move throughout the trading day. And the trade management part will be quite the opposite of yesterday. That's where you'll know that the strength on these shakedowns intraday, when there isn't a buyer up there at the top, well then that's slide that bid. But let us not forget that sliding that bid short would be a diminishing price action pullback. Diminishing price action pullback equals strength. That means that people are not wanting to get out of the name. We are in a major earnings season. So that's the trade management on the NYSE. There is the long gap up list. Very nice.